Good morning to everyone. I am Dr. F. Andrews, Assistant Professor, PG Research Department of Commerce, St.Joseph College of Arts and Science, Autonomous, Cuddalore. Today we talk about the consignment account. In modern age of competitions, manufacturer and wholesaler have to use all possible means to push their sales. So the consignment is one such method resorted to by them to secure sale of their goods in different distance places without opening branches there. Consignment is nothing but an agency agreement under which a manufacturer or a wholesaler sends his goods and its own risk to his agent in different places for the purpose of sale. The person sending goods for sale is known as consignor or principal, and the person to whom the goods are sent is known as consignee or agent. The main features of the consignment transaction: consignment of goods is not a sale. It is mere transfer of possession of goods. The relationship between the consignor and consignee is that of principal and agent, or seller and buyer, or not seller and buyer. The consignor continues to be owner of the goods, though the goods are kept and sold by the consignee. He acts on behalf of the consignor and is not the owner of the goods. The consignee sells goods at the risk of consignor. He is not responsible for any loss or destruction of goods. The sale proceeds belong to the consignor, and the consignee merely get commission and reimbursement of expenses that he might have incurred. And next, some important terms of consignment. Pro forma invoice. When the goods are sent on consignment, they are usually accompanied by the statement known as pro forma invoice. It includes all the particulars of invoice, like the nature of goods, number and quantity, grade, weight, goods measurement, goods price making, etc. Generally, pro forma invoice, which is sent by the consignor, include the price with a certain minimum amount of the profit below which the consignee is not allowed to sell. So, the pro forma invoice price is always higher than the actual cost price. If goods are sent by the consignor on pro forma invoice price basis. Account sale. After goods are received, consignee sent to the consignor from time to time a statement in which he outlines the total sales made by him, the expenses incurred and the commission to which he is entitled. Such a statement is known as account sale. On the basis of information contained in this statement, the consignor complete entries for the year regarding the consignment. Next one, commission. It is the remuneration to the consignee for selling consigned goods. It is usually calculated upon the gross sales proceeds realized by the consignee. Overriding commission. When consignor wants, that is, goods should be sold by the consignee at the higher price than the one which is prescribed by him, then he pays the additional commission for this purpose to the consignee. This additional commission is termed as overriding commission. And another one commission, Delgreed commission. Sometimes the consignee undertakes the risk of bad debts arising from the credit sale of consignment goods. In consideration for the extra risk borne by the consignee, the consignor allows him to an extra commission over and above the usual commission. This extra commission is termed as Delgreed commission. Expenses for the consignment. Both consignor and consignee have to incur some expenses for dispatching and selling goods. This expenses divided into the two types. First one, non-recurring expenses and recurring expenses. Non-recurring expenses may be incurred either by the consignor himself or by the consignee. All those expenses which are incurred till the goods reach the godown of the consignee are known as non-recurring expenses. These expenses are incurred only once on a particular consignment. Recurring expenses. These expenses may be incurred either by consignor or the consignee or both. They are usually incurred after the goods reach the consignee godown. They are of recovering nature and do not increase the value of goods. Example, warehouse, insurance, brokerage, advertising, salary to salesman expenses, expenses on goods damage, commission, etc. The above mentioned recurring expenses are mostly storage and selling expenses and therefore do not form a part of cost price of goods. Advance. The consignor normally insists on some advance payment from the consignee when he delivers goods to him on consignment. This money is adjusted against the amount due from the consignee. The consignee may make an advance which is to be adjusted against the future payment, or the advance may be made by the consignee as the security for the goods received on behalf of the consignor. Advance may be given by sending a check or draft accepting bill anyone. Stock on consignment. At the end of the given period, that is consignment given period, some goods might remain unsold with the consignee. In order to ascertain the correct profit or loss, the value of the unsold stock should be accounted. The unsold stock should be valued at cost plus proportionate expenses incurred up to the time of placement of goods in the godown of consignee ready for sale. The journal entries for unsold stock, stock on consignment account are to consignment account. The stock on consignment account will be shown on asset in the balance sheet at the end of the year. Next year, it will be transferred to the debit side of the consignment account at the opening consignment. Goods in transit. Sometimes it so happens that the goods consigned by consignor do not reach the consignee on the date of closing of account as they are transit. Such goods should be termed like unsold stock on consignment and need to be valued accordingly. Cost of goods in transit would include the basic cost of goods to the consignor plus proportionate expenses or consignee, as he has not incurred any expenses on these goods. Loss on consignment. Goods sent on consignment may be lost or damaged or destroyed either in transit or after they reach the consignee godown. Such loss may be either in two normal loss and abnormal loss. Normal loss, when the goods are lost or damaged due to normally expected but unavoidable causes like evaporation, leakage, breakage, dusting, etc., it is called the normal loss. This loss no effect either by consignor or consignee can prevent this loss, ignoring the loss. Abnormal loss, accidental loss or loss due to negligence is termed as abnormal loss. It is unexpected and beyond the control of the consignor. Loss of goods due to flood, fire, war, insect fire, etc. is also known as abnormal nature. Abnormal losses should be debited to profit loss account. Pricing of goods sent on consignment. Goods may be sent on consignment or sale either at cost price or at invoice price. Under this method, goods are charged to the consignment at cost price to the consignor. The pro forma invoice also prepared at this price. Invoice price. This method, goods sent to consignor at the price higher than their cost price. The intention behind prices goods at the higher price is to discourage the consignee from resorting to the dishonest practice. Thank you.